There's two aspects of this that I think is important for me to clarify. And I like the point on BlackRock and Larry Fink talking about 2% allocation and what that means. I mean, of course, if people start allocating 10% and all institutional managers and all large scale funds are doing that, I think we're talking hundreds of trillions of dollars at that point, right? So I think we need to remember the proportions of.
We're saying the same thing now. These market pullbacks should be seen as opportunities. Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be diving into some video clips and some PDFs from some of the world's largest organizations giving their perspective and their market outlook for the year 2025. We're also going to be jumping into the idea of Xrp ETFs in 2025. So make sure that you stick around for the entirety of today's video breakdown, because this is going to give you a very detailistic perspective on what to expect moving forward. Now, before we dive into today's video breakdown, which, by the way, if you all enjoy, please do us a favor, smash that thumbs up button and subscribe. Always bringing you all the realest, non-biased information here at CYPRX. I do want to give you guys a little bit of my personal opinion before we dive in, okay? Again, from my personal opinion, based off of what I'm going to share with you guys in today's video breakdown, it is unwise to follow influencers in this stage of the game who insist that the markets only rise indefinitely. Instead, again, it is my personal opinion, as an investor, you should focus on understanding the broader economic factors that influence market sentiment, particularly those that lead to market pullbacks. Recognizing when to buy and when to hold back on capital deployment is crucial, especially in the still early stages of crypto adoption. Unfortunately, though, many people invest based on emotion or biased information, which is something that I see amongst the vast majority of individuals in this digital asset landscape, and that leads to them overlooking the need for a mature strategic approach. While the crypto market may well continue growing in the coming months and years ahead, which I personally believe is going to happen, expecting an uninterrupted straight line to the upside is simply unrealistic, okay? And so with that being said, I'm going to show you guys perspectives from some of the world's largest organizations. We're going to be diving into some documents from Signum, from Galaxy today. But before we even jump into either of those documents or any of the panel discussions that we have to share with you guys today, I again just want to show you all how real here we are at CYPRX, considering the fact that we are probably one of the only communities that actually pays attention and calls out these macroeconomic conditions, types out handwritten reports to our private community well before the information comes out to the mainstream and the retail crowd, right? Just to show you guys a simple example. If you guys want access to these handwritten reports and our fundamental Zoom call breakdowns that we have throughout the entirety of the week in the private CYPRX community, come tap in with us. We'd love to have you on the team. We have anywhere between 2 to 5, sometimes even 6 Zoom calls per week, and we pump out a minimum of at least 3 to 5 handwritten fundamental reports discussing and talking about the market landscape before the news hits the average retail crowd. And I'll show you guys a perfect example. On December 17th, 2024, we annotated everybody's attention publicly on X, where I said, the rest of this week will set the tone for the remainder of 2024 heading into 2025. Do not be blinded by greed. This is when the market was operating at a peak at about $3.7 trillion. And I said, know when the sentiment shifts by knowing what to look for. A pause in rate cuts from the Fed, hawkish Fed comments, rising UK inflation, Bank of Japan rate hikes, or any hawkish comments from the Bank of Japan that would lead to yen strength, geopolitical escalations in the Middle East, Russia, Ukraine, or Trump tariffs leading to an increase in inflation. These are a few of the risks that remain, just to name a few. Understand the market in which you trade and invest in, and riding the waves becomes relatively easy. All that's really left for you to do is to manage your risk and avoid over leveraging yourself, right? And so now fast forward to today. By the way, you can see utilizing the tool on TradingView, right, where you can go in right here and you can copy the X post and you can paste them on the chart so you can actually see where these posts came out. I put this post out to you guys on December 17th, 2024, when the market was operating at a high. Fast forward to more recent times, we can see retail articles catching up. This is from days after December 20, 2024. Bitcoin drops to 97,000 following Fed's hawkish stance, right? Here's another fundamental piece from February 3rd, 2025. Bitcoin drops as tariffs weigh on risk assets. Here's another fundamental piece from the retail spectrum side of things. Bitcoin hits a 2-month low amid Fed rate cut concerns. And what were we telling you guys to pay attention to days, if not over a month in advance, December 17th, 2024, pause on Fed rate cuts. Hawkish comments from the Federal Reserve, Trump tariffs leading to an increase in inflation expectations. All of these things still remain in the market that could weigh on risk sentiment. And we told you guys about this at a high. This is not to toot our own horn. This is to encourage my followers and anybody else listening that is new to CYPRX to further your education about the markets in which you operate in. Stop thinking that these markets just go up in a straight line for forever. Are we in a bull market cycle? At the end of the day, who really truly knows? From my personal perspective, we've been in a bull market cycle for over 2 years now. Why do I think that? Because again, if we just allow the charts to speak for us, looking at price action, again, I have my charts off of candlesticks, and on this line chart, you can see that collectively speaking, since about November 2022, the digital asset landscape has been trending to the upside. So for people to think that now up here, we are just now entering into a bull market cycle, from my personal perspective, is a little bit illogical, okay? Understanding the market conditions and understanding what can change market sentiment can create a risk-on market environment which allows these digital assets to flourish bullishly to the upside, and what creates an environment risk-off that creates a pullback in these markets is your key to success. All right. So I wanted to start off with that because we're going to be diving into a document from both Signum and Galaxy that kind of reiterates the information that we publicly put out to you guys well in advance, right? December 17, 2024, letting you guys know what was most likely going to create a risk-off market sentiment. All right. And so again, this is not to toot our own horn. This is to encourage you guys to pursue your education, to really strive to understand the markets in which you operate in, and to really just take an educated based, mature approach when you're investing in this digital asset landscape. So let's jump into these two documents real fast. I don't have a whole bunch to go over. I just want to cover a few things. This is a document from Galaxy. Let's zoom in right here so you guys can see this. This is the January 2025 investment outlook from Galaxy Asset Management. All right. And we have this individual right here, the global head of asset management at Galaxy, Steve Kurtz. And one thing that he said right here in his introduction, he says, with the development in Washington over the last week, ranging from President Trump's digital asset-focused executive order to the repeal of SAB 121, I am deeply excited to see our efforts of the past 7 years finally come into fruition. We expect an unprecedented wave of talent and capital to drive productive innovation, IPOs and M&A, and investments to our space. As always in crypto, this will not happen in a straight line, and we will do our best to maintain a balanced and focused approach to our investing, which is what I am encouraging you guys to do. Again, this is coming from a large financial player in this game that is telling you directly that this bullish market outlook that all these influencers are just trying to get and attach your dopamine to, so that way they get views and your likes and your follows. Stop paying attention to that and really understand the macroeconomic conditions so you can better situate yourselves on the right side of the market. Know when it's time to implement capital into this space when the market is at a discount. Know when it's time to take profit, or know when it's time to just be patient and wait for a market pullback before deploying capital so you don't buy at tops. Okay. Now, to get into kind of the ETF spectrum of things, because the Signum report is also going to talk about the current risk environment and also ETF. So this is going to go hand in hand with the video clip that I'm going to play with you guys from Brad Garlinghouse from just a couple of weeks ago. So this document continues to read, before the approval of spot Bitcoin and Ether ETFs, investments through hedge funds and trusts were the primary ways for investors to gain exposure to crypto. However, these vehicles often come with lock-in periods, higher management fees, and elevated barriers to entry. The SEC's approval of both Bitcoin and ETH ETFs has opened the door for more crypto ETFs to enter the market, including single cryptocurrency ETFs for assets like Solana and XRP, as well as leveraged inverse and basket ETFs. Nonetheless, we anticipate a strong inflow of funds into crypto products as they are incorporated into model portfolios. So I like that. Again, even though it's talking about how the bull market or the trajectory of the total cryptocurrency market does not remain skewed to the upside for forever, it still paints a bullish perspective, which is the exact perspective that I hold here at CYPRX, is that, yes, the market long-term trajectory of this digital asset landscape is to the upside. But for anybody to think that this is not going to be an extreme roller coaster to get to those bullish targets is illogically thinking, okay? And they're going to get wrecked mentally. They're going to get, manipulated out of their positions, because there's going to be days when the market's down 30, 40%. They're not going to know why that's happening. And they're going to think that crypto is a scam, and they're going to get shaken out. Don't be that type of investor. Do not take that immature approach. Understand the market in which you operate in. Again, by the way, both of these documents were shared in our private CYPRX Discord for our community members to tap into and read, so that way they're not manipulated, right? And they're getting perspectives from some of the world's largest organizations. This is from Signum, their monthly investment outlook, February 2025. If we scroll right down here, just a couple of highlights. It says, as financial markets adjust to the disruption in global trade and escalating inflationary pressures, the crypto market continues to react to global risk events in a correlated manner. We were telling you guys this back in December, and now a Signum report comes out and talks about risk-off market sentiment currently affecting the markets. President Trump's apparent intention to reassure industry to the U.S. while continuing the assert of U.S. hegemony is causing significant volatility and dislocations in financial markets. These policies, if they are consistently implemented, may indeed lead to a revival in America, stemming the long-standing decline from hollowing out the economy, disincentivizing productivity and losing ground geopolitically. But the short-term implications are inflationary and negative for global growth. As financial markets adjust to a disruption in global trade and escalated inflationary pressures, Bitcoin is caught between two contradictory paradigms, being increasingly seen as a safe haven asset akin to gold versus being traded as a risk asset. While the gold prices make new all-time highs in the wake of the rising global instability, Bitcoin still tends to sell off sharply on risk catalysts as a knee-jerk reaction. These sell-offs, however, tend to create opportunities, which is, again, exactly why here at CYPRX, we were telling you guys at a market top what things were about to weigh on possible risk sentiment, which would allow for us now to be deployers of capital. Now that the market is discounted and not operating at a freaking all-time high, $3.7 trillion, now the market is down $700 billion, currently trading at about $3 trillion. Is it time to deploy? In my personal opinion, yeah, it's time to stick some capital into these markets. I know that I am, right? Because I wasn't buying months ago when everybody was euphoric, thinking that Trump was going to bring massive continued bullish optimism to this market. We knew here at CYPRX that some of his policies and some of his stances on the overall trajectory of the economic landscape were going to weigh on prices or create a risk-off market sentiment. And now we are capitalizing on those discounted prices. Again, strategically positioning yourselves in these markets by understanding the macro is your key to success. But so many people overlook this because they think by watching influencers that are consistently bullish on the internet, downloading an application, just randomly implementing capital into these markets is their key to success. If you want to take that route, be my guest, but I can guarantee you that we will continue to outperform average retail investors who think that way, right? So if you want a more strategic approach, come tap in with us here at CYPRX, because I'm telling you guys, the information that we put out is the exact info that large financial institutions are tapping into, okay? Here it says, by the way, to continue down the ETF rabbit hole, a leaked webpage from the CME suggests that the exchange is planning to list futures on the tokens of Solana and Ripple. Although the CME publicly confirmed that no decisions have been made, currently the CFTC only authorizes derivatives on Bitcoin and Ether. It's clear that such plans are being considered. Not only would this help integrate these tokens into the financial system and boost their adoption, but once these futures launch and trade for a while, they would offer a path to the approval of ETFs. Now, if we pause here for a second, by the way, again, if you guys are enjoying this video, smash that thumbs up button and subscribe. Always just trying to bring you all the realist perspectives. I don't want anybody to think that because we were able to call out this local market top that we're saying, haha, we told you so. That's not what I'm trying to do here at all. I'm just trying to encourage you guys to take a more educational based approach. And instead of always following bullish moon boy hypists that continue to get you wrecked and have been getting you guys wrecked since 2000 and probably ever since you got into crypto, take a more mature approach and tap into a community where we're actually educating our community members on current market conditions and really fixating their attention on strategically positioning themselves on the right side of the market, right? Let's listen to Brad Garlinghouse again. This is from just a month ago, where he kind of subtly hints at confirming that there is going to be an XRP ETF. And this just paints such a massively bullish perspective on the digital asset, and getting into it now while prices are discounted before these financial institutions come in and start to ramp up prices. Take a second here and just listen to what Brad says.
Thinking. Brad, there's been an influx of XRP ETF filings, both in and out of the US. How do you view all of this? How do you view these filings?
Well, I think part of the transition from maybe more speculative retail into more institutional adoption and participation is the ETF step. certainly, the Bitcoin ETF getting, approved, the SEC was dragged kicking and screaming a little bit towards that outcome. But getting the Bitcoin ETF, I think, was a monumental event in terms of expanding the ability for others to participate, particularly institutional investors. So to me, I think I said then publicly that if people would ask me, is there going to be an XRP ETF? And I just look, it's inevitable that there will be an XRP ETF. And now I think I actually don't even know. I think.
Look, it's inevitable that there will be an XRP ETF. So I just wanted to play that little video clip because, again, you see us here at CYPRX months in advance talking about the things that could weigh on risk sentiment. Then fast forward, you see a January and February report from two large financial institutions talking about risk sentiment and how this bull run is not going to be just some straight line to the upside, right? And Signum talking about the current risk environment, inflationary risks, tariff implications, so on and so forth. The same stuff that we were projecting to you guys months in advance before now it has come into fruition. We're saying the same thing now. These market pullbacks should be seen as opportunities. These not financial advice. Again, I'm personally investing capital into the market when the market is down over $100 billion, right? On days when the market drops or declines certain percentages, I'm implementing capital because the long-term trajectory of this digital asset landscape is still to the upside. Let me continue to support that bullish narrative that I have long-term with some other industry-leading experts on stage from just 9 days ago in a video posted under Industry Outlook 2025, Navigating the Future of Crypto. I'm going to play about 3 to 4 video clips. They do introduce themselves at the beginning, and all of these people are from large hedge funds and large institutions, okay? So just take a second here and listen.
And if I were in the audience, I would be really curious what these wonderful people have to say. Most of them are my friends for a long time. And these are not the people that got into crypto yesterday because of the hype, but the real OGs of the space that predict the future of finance and shape it with everything that they do. And we have a really great mix today. We have Aliyah from a very crypto-native Signum bank. We have Alan, the GSR and market-making guys, the people who control the liquidity and the money flows. Lior from the VC, also the money part, which looks for the outliers in the space and funds the next unicorn. Maybe that would be one of your projects in the future. And Dominic, a little bit more traditional player, nevertheless, still very technologically advanced from Bitcoin Swiss. This was a high-level overview, but I would...
I'll jump in quickly just to add to this. I think that aspect of it is clear. I think there's a large capital market in the US that's now been opened up. I mean, to make it specific and concrete, I think the first things that we've seen is obviously the transition of the SEC and the role in enforcing a lot of the crypto activities and, let's say, inactivities or illegal activities that were alleged over the many years. So I think the first thing that happens, and we've already seen that, is a lot of the Wells notices or the enforcement actions from the Department of Justice have immediately been at least put on hold, withdrawn, and that just has fundamentally shifted the way in which many very early adopters in this space, entrepreneurs, founders who took a lot of risk back in the day to actually create the protocols that we now talk about as household names in this industry. A lot of the things that they were engaged in is no longer seen as negative. It's really seen now as an opportunity to replicate and learn from many of the things that happened over the years. So, from the regulatory mindset, I think that idea that people can now engage with Uniswap, right? I mean, let's not forget Uniswap was dealing with so many issues. Ripple has been fighting the SEC for God knows how long, and I'm not promoting any of these tokens, coins, or ecosystems, but really just referencing the fact that for all of the attention that we've had for developments in this space, many of these large-scale, multi-billion-dollar FDV ecosystems and projects were still dealing with the basic foundational right of what is this ecosystem and is it compliant with the US? And the US is 60% of the global capital markets by dollar value. And as soon as you've now removed the ambiguity and the illegal nature or alleged illegal nature of many of the projects dealing in this space, it creates this whole windfall, which is what Dominic's talked about. So we're really excited about that trajectory. And I think that fundamentally changes the rules of the game, not just for many of the DeFi native projects and protocols, but also for many of the more centralized CeFi players like Circle, like Bullish, other companies who are planning for their IPOs and looking to tap into regulatory capital and really scale up this entire industry. So we're incredibly excited about these developments. I think it fundamentally changes the entire landscape for our industry. And it's really just the beginning, to echo Dominic's sentiments.
I mean, if I can also add something, And it's probably going to be a bit the roller coaster, to take up what my colleague already mentioned. I think it was very good for the vibes. I mean, when Trump won, we were like at 70, we teleported up to 80. And I think now we have a lot of expectation in the market. And there's also some probability that it's going to be disappointing. And we're going to see the roller coaster mentioned by my colleague. I mean, one thing is anti-regulation is going to be implemented. It's going to take some time. And I think like migration, taxes, and tariffs will be like on the forefront before actually crypto is getting more clarity. Additionally, it's probably going to be very good for the Dino coins, so the tokens that already have been out for a longer time. Because when we look
in December, we also launched an outlook piece with a couple of predictions, and based on our risk models and long-term exponential growth models, we had a conservative floor target of 10 trillion. So I guess like 7.5 is rather on the even on the more conservative side. And basically, again, there are like so we are risk models and long-term exponential growth models. We had a conservative floor target of 10 trillion. So I guess like 7.5 is rather on the even on the more conservative side. And basically, again, there are like two catalysts for it. We are currently matching again the cyclicality of Bitcoin, of the US election cycle, of the liquidity cycle. So there's this notion of there is some onset of an easing cycle when it comes to monetary policy in the US. And then obviously institutions, as you outlined, they're still like around 60% of the big players still not able to allocate into these ETF vehicles based on compliance restrictions or firm-wide policies, for instance. And this should resolve in the upcoming months, and then I guess like we will see like an acceleration in institutional flows.
Dominic.
Yeah, so I think there's two aspects of this that I think is important for me to clarify. And I like the point on BlackRock and Larry Fink talking about 2% allocation and what that means. I mean, of course, if people start allocating 10% and all institutional managers and all large-scale funds are doing that, I think we're talking hundreds of trillions of dollars at that point, right? So I think we need to remember the proportions of what seemingly little numbers in traditional capital markets can actually do to influence the market cap in our industry. And I think the point I would reference here was it seems like a big number until it's not. And 7.5 trillion, I mean, even just in November and December, there was Blockworks and the Block putting out articles. I mean, 1 trillion was added in those 2 months. It was a 30-day period where 1 trillion was added alone. I mean, right and before the election, market cap was at 2. Right. So I think, again, thinking about what are the catalysts that really fundamentally change and drive this, it doesn't need much to really fundamentally change the way in which value is brought into this industry.
So I just wanted you guys to hear that, right? They literally talked about how BlackRock's only allow 2% allocation right now. Imagine if they allowed 10% allocation, which is still not a lot of money. Okay. That would onboard hundreds of trillions of dollars into this digital asset space, right? So just take that into consideration. This market landscape could flip on the drop of a dime. Continue to take advantages of opportunities when they present themselves. Continue to understand how to strategically position yourself on the right side of the market, to be patient in times of pumps, right? Not buying at tops, and then positioning yourselves in discounted positions when the market is in pullback environment, risk-off environments. Okay, again, if you don't know how to do that, tap into the CYPRX community. We're constantly showing people, going over Zoom calls, going over fundamental breakdowns. We're constantly breaking the market dynamics down for individuals way before the average retail crowd catches on to things. And we're constantly tapping into institutional perspectives via our crypto-related research in the private Discord. As always, many blessings to you guys. I hope that this video breakdown enlightened you all on the current market landscape, why we're kind of currently seeing some drops in prices across the board, but then also painting a very clear picture for you all on how early we are in the trajectory of this overall digital asset landscape to the upside over the coming months/years. With that being said, none of this is financial advice. I'm not telling you guys to go out there and buy digital assets. If you guys enjoyed this video breakdown, do me a favor, smash that thumbs up button and subscribe to the platform before you head off. And with that being said, I'll see you all in the next video breakdown.